All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. And guys, Bitcoin has continued to pump today up to our key level of resistance that I've really been watching for a couple of weeks now. And I've been talking about this bigger correction, making it at least up to this area between 88,000 and 88.6 is a major corrective target for this pump from 76.6. We have finally come up here. It took some time. It took a little bit longer than I thought it would, but we have finally come up to this area, and you can see so far we are rejecting from this area and seeing a bit of a drop. We are seeing our money flow top out on the hourly chart with confirmed bear divs on the hourly chart. So first off, I want to talk about something that from yesterday. In yesterday's video, when I uploaded it, we were having the swing failure pattern of this internal high into our 786 level. We have confirmed the swing failure pattern, and we were dropping, and we were right about in this area when I was making that video, and I was talking about a bullish backtest of a range, and I'll go ahead and pull that range. That was our smaller range from March 9th to let's just put it to yesterday. And you can see the value area high, the bullish backtest of that value area high was also at the bottom of the ascending channel that we've been trading in, and it was also our local golden pocket pull from the lows on Saturday to those current highs that we had yesterday. Now, after I ended the video, we continued to pump to the upside, and I actually was waiting for a TP1 at the value area high. I did think we were going to get that drop to the value area high to bullishly backtest it. We never did get that full drop to the value area high, and I did get stopped out in a loss on this trade. I had a plan. I was sticking to my plan to take a TP here. You don't win them all. Even if you do have proper confirmations to enter the trade, sometimes the market just goes against you, and I lost it. That's okay. I had my stop loss above those wick highs, so as soon as we broke those wick highs, I was actually not paying attention to the charts at the time. I got stopped out, and I lost that trade. We did have confirmation to enter the trade when we confirmed the SFP of these highs, and we had some bear divs there, but not all trades are winners, even if you have confirmation. And that's why stop losses are really important to use, because even if you got all your technicals right, sometimes the market just does move against you. So stopped out on that trade, but you guys remember on Friday, I was talking about longing 83.2. We did take that long on 83.2 on Friday. I completely closed that long exactly at 88,600 today. So that trade was a winning trade. It's completely closed now. And I also did short up in this area up here. And I'm going to tell you why I shorted up here. If we zoom into the 15-minute chart here, you can see how many bear divs we were getting into our key resistance area. I mean, let's look at this here. Higher lows all through yesterday, all the way up to this morning when we hit our 88.6 level. Look at our bearish divergence. How many humps is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 humps, 10 drives of 15-minute bear divs with money flow coming out the entire time. Now, our money flow is just starting to cross over into the red here on the 15-minute time frame. And if we look at other time frames, there was bear divs on other time frames as well. I was asked this morning in the Discord, or someone commented, they said, even with these bear divs, when we see Bitcoin pumping like this, I do not short. And I actually agree with that. What I told that person in the Discord today, I said, no, I'm not either. I'm waiting for a range to form up in this area. And once I start to see a range form and start to see some weakness within the range, that's when I will short. I think my short was around 86. Let me just check on my phone here real quick. All right. Futures. It is around 88,321. So you can see I got in late on my short because I was waiting. I did not long the exact top into the value area high here because I did not see, even though we were seeing bear divs here, I was not seeing proper confirmation to enter a short yet because price action was so explosive to the upside. I wanted to wait for a range to form and then I was going to start to take a short here. Now, I think I entered in 2 spots, so I think my first entry was like 88,480, and then I entered a little bit more once we started dropping, which averaged it down to about 88,321. Now I have put my stop above this. Well, I put a partial stop above the VWAP here, just in case we start to break above the VWAP again. I will get stopped partially on that trade, guarantee that I have somewhat of a win on this, and then of course my final stop is above the wick highs here. And I'm going to talk about that because I am just playing this short here from this area as a scalp for now. My first TP level is going to be the back test of the daily that we broke yesterday. Yesterday we had front run that daily when we came up to the liquidity grab here, and you can see we flipped the daily to support, back tested it, broke above the daily, flipped it to support, and continued up to our box. Now, I did say in yesterday's video, if we break this daily to the upside, we have a very, very high probability to come up into our resistance, and particularly, I was watching towards the top of the resistance where our intermediate range value area high was around 88.6. And so I did take that short from there, and I have a TP already set, a limit TP order already set at 86,900, right where this daily level is. And I'm going to explain why as well. But first, I want to go ahead and actually, I'll explain right now. So from our lows on Friday, this was a pretty corrective 5-wave move to the downside here. We ended our 5-wave move to the downside, and then we saw a wave 1, wave 2 here, and on Saturday, we bounced from the bottom of the channel in our wave 2, and now clearly this is impulsive. This looks like a wave 3 to the upside. Okay, so what are we looking for in an impulse? We're looking for 5 waves in an impulse. Have we seen 5 waves yet? No, we have not. Let me zoom out actually a bit here so we can get a better look at this. Let's go on to our hourly chart. So you can see we had our 1, 2, 3, 4, 5 wave move to the downside, and then we hit into our key area of support on Friday. We longed that support. Many of us in the Discord longed that support. We saw a weak push up, and then we started retracing down over Saturday, but held the bottom of the channel. So this was our wave 1. This was our wave 2. And this clearly turned into a wave 3 impulse here. Now, we have not had a 4 or 5 yet. So right now, we are retracing in our wave 4. What are the most common targets for a wave 4? Between the 382 and the 0.5. Now, when we're looking for a Fibonacci retrace on a wave 3, you do not take it from the lows of wave 1. You're going to take it from the lows of wave 3. So if we do our Fibonacci pull from the lows on Saturday, which was the lows of, or the beginning of wave 3, or the lows of wave 2, excuse me for that mistake there, and we go to our 382, which often acts as support or resistance in a strong trend. Look at where our 382 is coming in, right at our daily level. This is why I have a TP level on the short at this area, and I am going to TP 50% of my trade here, my short. I'm going to leave some to run just in case this bigger correction is over from this area and we really start to dump. But this, as soon as I hit this TP, my stop loss will go to break even. Guaranteed winning trade. Already it's going to be in a winning trade because I have a partial stop loss above the VWAP here. And so now that we look like we're clearly in an impulse to the upside, if we go ahead and turn on our volume here, you can see in this wave 3 push to the upside here, you can see volume increasing quite a bit here. And now that our volume is increasing so much here, we can classify this more as an impulse rather than a correction, a mini impulse within the bigger correction from 76.6. But wave 1, wave 2, wave 3, you look for a wave 4 pullback. 382 to the 0.5 are our targets for that pullback, and then one more wave 5. Now, you guys remember how I've been talking about that 90.5 to 90.7 key area of resistance of many of our high time frame pitchforks that are above us, this area up here. Many of our high time frame pitchforks have perfect confluence with that. I would say 90.5 to 91K is where I'm going to be looking for our potential wave 5 target to come in on this 5-wave impulse to the upside. And then this might be the end of the bigger correction, this whole entire correction here, where we then could see it roll over and come to the downside. So don't be mistaken. Overall, on the larger time frames, we still have a greater possibility of a bearish case scenario where this entire move up from 76.6 still does look corrective overall, and we could roll over and make new lows below 76.6. Now, that's not going to happen overnight. That's going to take weeks to play out, but we are looking for our targets to end this correction to the upside. 88 to 88.6 was a major target for me, but based off of our local impulse that we're seeing now, I am suggesting that it could go up to 90.5 to 91K, where we have our major pitchfork resistances in confluence with our prior lows of our big range. Let's zoom out onto the 4 hour. This big range that we broke out of, that we were in for 3 or 4 months here. So that is what I'm looking for. Now, the value area low of that range is about 93K, and it is still a possibility we could make it up to 93K as well. You can see 93K is within our band of resistance, our pitchfork band of resistance of this bullish pitchfork band, where you can see we bounced perfectly from the bottom. It was also the much bigger prior bull market pitchfork band down here. So a lot of confluence for these pitchforks are showing us where this correction could end here. Now, until we lose our trend, let's go back to the Coinbase chart here. Until we lose our trend of this ascending channel, we have to, the trend is your friend until the end. So until we lose this ascending channel, we can expect higher highs and higher lows to come in on the charts, and we can expect Bitcoin to continue pumping to the upside. And this is what I'm talking about with 93K. So look at where 93K is coming in here. First of all, by the time we get up there, it's probably going to be closer to the midline of our channel, of our ascending channel. And we have our anchored VWAP from the all-time high that's there, and that's our prior range value area low, right around 93K, 92.9. Now, I do want to talk about this range as well, because since we started filling in more of this range to the upside in this grind that we've been seeing the past couple weeks, we've developed a more intermediate range on Bitcoin. For a while, we were just looking at the smaller range from March 9th in this area, but now that we are breaking this to the upside, we can zoom out a bit and we can look at our more intermediate range in this area from when we broke the prior range down. We broke that prior range down, and then we've had a couple back tests of that prior range, confirmed lower targets. So now we are developing a more sideways range underneath the 93K value area low down to about the 76, 78K area in this general area here. So we can look at this intermediate range and look at what happened today, guys. I pointed this out yesterday as well. Our value area high of this range was right around 88.6. Well, where are we rejecting today? Around the value area high of the range. Yesterday in the video, I talked about how we broke this point of control to the upside, and if we continue just the rules of trading a volume profile, you deviated that range to the bottom. You were able to break back in that range. Yes, we rejected from the point of control, but we bullishly backtested the value area low, held the value area low, came back, flipped our point of control to support. What's the next thing you look for? You look for a move to the value area high. And we got that move today. We finally pumped up into the value area high. It was also our golden pocket. If we do our golden pocket pull from this was a ABC correction. We were looking for the end of the ABC correction to be exactly at 76.6 where it did end. So we can go from the highs of wave A to the lows of wave C. And let's turn on our golden pocket. Our golden pocket was also in this purple box of resistance. And that is why I was looking at this area so strongly as a resistance area. And we also had a naked daily point of control there and a naked weekly point of control there. Let's see. So 88.364 was a naked daily point of control. And we also had a naked weekly point of control. It's on there. I'm not going to highlight it for you guys, but you'll have to take my word for it. There was a naked daily and a naked weekly point of control. So major levels of volume, Fibonacci, at volume confluence with the value area high, the naked weekly point of control, the naked daily point of control, and our golden pocket. This was the more major target of resistance that I've been looking for Bitcoin to come up to on the charts for the past couple of weeks. It took a while. We finally got up here, and we are starting to see the retrace with bear divs on the chart. Now, I'm going to go back to this. Because of our local impulse that we are seeing here, I do think we could make it a little bit higher. And I just want you guys to be aware of that. So that's why right now I'm playing this as a scalp where I'm going to TP 50% of my long at this daily down here. If we break it to the downside, great. I closed my long already, and I'll just let the short run. And if we start to lose this ascending channel, we can look for that bigger drop. I would be looking down to this 80.7 area. We have the value area low of this intermediate range a little bit above that area, but I am looking in this general area here between 81K and like 80.5. So that's what we're looking at on Bitcoin today here. We did finally get that move we were looking for. We are hitting the value area high of the range where we can expect a little bit of a pullback, even if we're going to break higher in a wave 5 of a local impulse to see us come hit another higher target, those major pitchfork targets, and then this correction could end and roll over. I don't know, to be honest with you, when exactly this correction is going to end, but what we do is we mark out the key resistances on the charts, and if we get the confirmation, we take the shorts. Today, we were getting the confirmation to take the shorts from this area, and so far it's playing out. Yesterday, we got the confirmation to take the swing failure pattern short with the bear divs and the confirmed SFP. It didn't play out. I got stopped out. I lost the trade. Not every trade is a winner, even if you do have proper technical analysis on the charts. Sometimes the market moves against you, and that's why risk management is key. Okay, so that is what's happening here on Bitcoin. I do want to go into this level here. You can see, yeah, we've had this box marked out ever since way down here. And so we are finally hitting into that box. You can see we're breaking above this pitchfork band, this lower pitchfork band here. And you can see that our daily is right around the back test, the bullish back test of this pitchfork band. Let me hide this channel so you can get a better look at this. Let's go ahead and come in here, hide the channel. So yeah, you can see our naked daily point of controls up here. It's hit. I'm going to go ahead and delete it now. You can also see our daily is below us. And even though we've broken through it bullishly, I'm leaving it on the charts for the bullish backtest into our pitchfork band, into our 382, and into our daily level. Or our daily level. And the highs of the pitchfork here, the bearish pitchfork, are around that 90.5, 90.3, a little bit lower. We could see a little bit of a wick pass there. But generally that 90.5 to like 91K is an area of resistance I'm looking for Bitcoin to reject. Now, if we start to break this bearish pitchfork that was pulled from the all-time highs, if we start to break this to the upside, then maybe we can look at Bitcoin to come all the way up to take the highs of this ABC correction around 95K. But in that case, we play it level to level because 93K is a major area of resistance that we need to watch. What was our prior support of the value area low of our prior 3-month range is now being flipped to resistance, already tested twice, already rejected twice, and we have to see what happens when we come up here again. One thing I would like to warn about, guys, is we are building a very strong liquidity curve in this ascending channel here that we are seeing. Higher low, higher low, higher low, higher low, higher low. If we start to lose this trend, we could flush down very quickly to sweep all of this liquidity that has been building for the past couple of weeks. Now, speaking of that, I want to go into our liquidation charts. Let's go into our heat map here. And I'm going to go to the Model 3 heat map real quick, and we're going to go into the 2-week chart. So we can look at our 2-week chart, and the past week or so, I've been telling you guys about those two clusters of liquidity. One cluster was around 85K, and then the second major cluster was in the 88 to 88.6K area. Now you can see we have finally taken out those major clusters of liquidity to the upside, and that's another reason why I was expecting Bitcoin to push up to this 88K, 88.6K resistance for a couple weeks now. Well, now that we've taken that liquidity, look at where our liquidity is now. Our major liquidity is now below us. This liquidity acts as a magnet for the market makers to come stop out leveraged positions or just open positions and then continue the move. So we have a major liquidity cluster that's down below our lows that we made on Saturday. Those weekend lows on Saturday, and then we had this parabolic push. Let's zoom back into the hourly chart, and these weekend lows here on Saturday, and we've been pretty much going parabolic ever since then. That is a parabolic move. It's a low time frame parabolic move, but that's a parabolic move there. So we have some liquidity below this parabolic move and below these lows here on Saturday. That's our first major liquidity cluster. And then I just want to show you guys this. I just find this interesting now that there is such the biggest liquidity cluster on the chart, or one of the biggest, is down at 67K. 67K. I've been talking about this bigger distribution pattern that might take months to play out, but I've been talking about us dropping to 72 to 70K as the more macro support level for this distribution pattern. But I just want to highlight for you guys, let's go on to the chart, another chart here, and let's zoom out to the daily chart. And I just wanted to show you guys that our point of control of our prior 7-month range in 2024. Let me get rid of this real quick to clean this chart up. Our prior 7-month range in here, the value area high of that range is in confluence with our 72 to 70K golden pocket, and that's why I'm really looking for that 72 to 70K area to hold as a support level. But our point of control here of that range is at 66,826. So now we see that the major liquidity resting at, $67,000, right below or right at our point of control, $67,000. I still think that 72 to 70K is a major level that we could see this bigger correction to the downside end, and it might take us another month to get down there. But if we start to break 72 to 70K, we know why, because there's major liquidity down here at this point of control. And the point of control is the area where the most volume has been traded in a range, the fair value and the highest volume. So oftentimes, more big players like whales that have longed in this area here in this wave 4 weekly Elliott impulse correction, you can see that if we do come down to that POC, that point of control, they will defend their positions and they will add to their positions at the level where the highest amount of volume was traded in this area if they are bullish on the asset. And so I just want to point it out right now, because if this happens in a couple months, I don't want you guys to be surprised by this. 67K, we have to keep on our radar more than we were before because of that liquidity that's resting down there. Now, I am not saying we're going to go down there right now or anytime soon. And I'm not even saying we're going to go down there at all unless we lose 72 to 70K. But we have to, as traders, keep these macro time frame major target zones in our minds here. All right, let's go back to the Bitcoin chart here, and let's go back to our Coinbase chart. Okay, while we're on the daily here, we can just mark out that new daily level. So once again, guys, another new daily level confirmed. Actually, I think that's the one I've already had marked out. Let's go here. Okay, that's a new naked daily point of control that I marked out yesterday. Yeah, naked weekly point of control. And then, yeah, we did mark out that daily already. So from 83,852. All right, so, yeah, this daily that is at 86,877, it has been tapped already, but now I'm leaving it on the chart for now to look for it as a bullish back test on this little drop we're seeing right now. Let's go in real quick to our CVD, and let's look at our CVD here. So you can see that we were building, and actually we are still building, some pretty bullish CVD divergences right now. And I want to talk about this because I warned about this in the Discord earlier today. From the lows on Saturday here, and actually primarily from like these lows down here, this little correction down here, you can see that our CVD, or our price action, is making higher lows on the charts. Our CVD is dropping way lower, and our open interest overall from that area has pretty much been straight up. So we are building bullish absorption on the charts right now, suggesting that we could bounce from that daily at 86,900 or 86,877 and make one more push up on this correction before we ultimately roll over and start coming to take out some of these lower levels of support. Bullish CVD absorption is happening now. And in yesterday's video, I did talk about this area here. The move up that we saw yesterday was a healthy move up that was supported by new money that was entering the market that was pushing the price up on Bitcoin. Now, you can see here that today, really from this area that I shorted yesterday as well, the SFP, but this whole price action that happened overnight and today, we have seen shorts coming in overall, and they're new shorts. Why do we know that? Because our open interest is increasing while the CVD is decreasing. So new shorts have been coming into the market and shorting before our resistance. Shorting, all before our resistance level at 88.6. And they are trapped right now. You can actually see, we also did have some longs, and we're seeing a drop in open interest right now because, let me refresh this so that I can just get rid of all this real quick. Oh, gosh. All right, bear with me, guys. I'm sorry about that. Open interest, stablecoin, coin market contracts. Okay, so you can see right now we're seeing a drop in our open interest here because we are... a lot of people were longing towards the top. They were longing towards the top of this pump. We were seeing longs that were coming in right up in this area. Look at these longs here, longing right up in this area. They're trapped. Now they're starting to become underwater now that we're dropping. And so we're seeing a little bit of a short squeeze here. Long squeeze. I'm sorry, long squeeze. A squeeze to the downside. We're squeezing longs out of their positions. Late longers. So we are seeing that pullback from that key area of resistance that we were watching. I've been really watching to hit this level for 2 weeks now, and we finally come up to hit it. Now that we're up here, based off of our local market structure that we're seeing, I do think it is possible that we could make one more high here. But I want to see us come down to hit this daily in the 382 to backtest it as support, because in a wave 4 Elliott wave correction of an impulse, the most common targets are between the 382 and the 0.5. So let me actually go ahead and come in here, and we'll turn on that 0.5 as well. And you can see the 0.5, depending on how long it takes, is going to be around the bottom of the ascending channel if we chop for a bit. And usually your wave 4 correction lasts longer than your wave 2 correction. So let's actually just look at this real quick. Let's do a measurement tool. Let's grab our measurement tool. Let's go from the highs of wave A to the lows of wave B. That took about 1 day and 2 hours. So if we go ahead and measure this from the highs down to like this area, that's 1 day and 19 hours. So that is a longer correction. There is a possibility we could do something like this and just chop all the way down to the 0.5 in the bottom of our ascending channel about a day and a half, 2 days, and then see that wave 5 push up to 90.5 and then see the bigger drop. So time-wise, that would make sense, because our wave 2 took about a day and 2 hours, so we want our wave 4 to take a little bit longer. Generally, that's the case. That's the general rule of Elliott waves. It's not a hard invalidation. Your wave 4 can be shorter, but just pointing that out there, you generally see that happen. Okay, enough on Bitcoin. Let's go to Ethereum real quick. Ethereum, the last time I talked about Ethereum, you guys, we were breaking this volume, and actually let me pull this volume profile back a bit because the levels have shifted a bit. But we were breaking the smaller range from March 9th. We broke that value area to the upside, and we hit into our local 786 fib pull. I've shown you guys that many times, so I'm not going to talk about that. You can see here we dropped. We had a small bounce from our channel midline up to the VWAP, lost, and then rejected from the VWAP, lost that channel midline, came back up, bearishly backtested it pretty much to the exact dollar here, rejected from losing the channel midline, dropped back down to bullishly backtest that value area high. We got a decent bounce, but made another higher low. We got another try at the value area high, and overall, yes, we did see some price action underneath it, but overall it held, and we continued to pump to the upside. So we were looking for, now that we were breaking this range bullishly, back testing it and flipping it to support, we were looking to come up to our next box of resistance, which I think I deleted off the chart, but we had our box of resistance at the golden pocket of this move here. Let's see, was it this one? Golden pocket. Yes. Okay. So we had our golden pocket that was up here between 2104 and 2122. Let's go ahead and drag this over here real quick and look at where we hit into today. We hit our golden pocket. We hit the beginning of that support box or that resistance box that I was looking at. And we are seeing a little bit of a range start to form here, a consolidation range here. Now, Ethereum is looking pretty strong here still. You can see that we're just forming a little mini sideways range. So if we zoom out onto the, also, I just want to point this out. Ethereum did not have 1 hour bear divs here. Money flow is topping out and dropping a bit, but the bear divs that we were seeing on Bitcoin on the hourly, we were not seeing on the hourly on Ethereum. And we are just trading within this little range here. So if we go ahead and look at these lows here, up to the highs, we're trading in this little range here. And as long as we stay within this range, we might continue momentum to the upside. I would be looking for a swing failure pattern. Anytime you see a big pump like this and then you see a little retrace, this was like equal to Bitcoin's 85K zone when we were in that much bigger range. So look at that first red candle there at 2062 to act as a possible SFP into a backtest of the daily and then continue higher. But right now we are just in this range, so you could trade if you're doing small time frame like scalp trading. You could just pull this range here and you could trade this range, rejecting from the POC and the channel midline right now. We are starting to lose this channel midline and flip it to resistance, so we could work our way down to retest this daily at 2056. But Ethereum overall is looking strong. We were looking for this push up. If we bounced and held if we back tested and held the value area high, we were looking for a push up to our next purple box. We got that as well. All right, now we can zoom out. I'm going to delete this golden pocket now. You can see we hit that 618 perfect. And the next level of resistance that I'm watching here on Ethereum is this guy up in here. So you can see that it's our previous range point of control up here. It's also we have a fresh daily level at 2203. We have our larger 786. You can see this dotted line coming down here is our large daily descending channel midline. It's also the top of our smaller ascending channel, the top of it. So we actually have a lot of resistance up in this area here where we could see Ethereum pump all the way up to between really 2200 and 2216. And then if we break that, this guy right above it is still of importance to me. That's our golden pocket, and we do have a value area high of our prior range that's up there. And the channel midline is actually now closerly aligning to this box down here, but I just want to mark it there for you. All right, yeah, see, this looks kind of bullish to me here on Ethereum. If we can start to close some hourly candles or even 15-minute candles above this midline, we could probably continue a bit higher here. I'm just going to go ahead and check Bitcoin real quick to see what it's doing. All right, Bitcoin's not bouncing near as much as Ethereum. If Bitcoin starts to break that VWAP, I've got my partial stop loss set, and I might even just close the entire position for a small win. But I would like to come down a little bit lower to hit this 382. Okay, back to Ethereum. So Ethereum overall on the chart is looking pretty bullish here. We did have some pretty massive bear divs. You can see this is what Jason calls the bearish man boob pattern, but you can see here we were making higher highs in the charts, lower highs in the momentum waves, and our money flow was topped out and our money flow was draining here, and it's crossing over into the red. So we were seeing the bearish signal up near the channel midline, but right now Ethereum is acting much stronger and holding the lows of this range in here. So as long as it holds this range and doesn't lose it, you know, Bitcoin started to lose its micro range for today, then we can continue to the upside. In that case, I am just going to be looking at that 2200 to 2216 area. And if we start dropping here, okay, so let's zoom out onto the 4-hour chart. Yeah, wow. Look at those 4-hour wicks, like those doji wicks on the doji candles on the 4-hour there. But we are still continuing the trend to the upside. Money flow looks pretty strong, and it's continuing pretty strong here. No bear divs on the 4-hour chart, which tells me overall we could probably come a little bit higher. This is the big descending channel midline that I'm talking about, by the way. I will turn this blue so that you don't confuse it with the smaller one. But you can see how well from the 4,100 highs, we've been chopping in this bigger descending channel. And now the midline of that channel is going to be a very important area where we could reject. Midline was holding as support, support, all support through here. Lost it, resistance, resistance, and now is it going to act as resistance again? And then one other thing I want to do now is we're going to take this channel that we were seeing, or this volume profile, and I'm going to pull it to present day price action, which is going to change the value area high. You can see now that it lifts the value area high up just a bit higher here to where that kind of pump started today. You can also see that our point of control now, well, point of control is still in the same area with the naked daily point of control at 1904. So I do still think this green box that I had marked out is our support level that we could be watching. The golden pocket's no longer going to be there now that we have made new highs. So we can actually look at our new golden pocket. Let's just go from the lows up to the highs. Yeah, we do have the golden pocket on the weekly though. So that area is going to be very nice at 1886, 1887-ish. I'm going to be watching this support though, because we do have the naked daily point of control and the regular point of control there as well. And then the one other thing now we can do with this fib pull is we can bring it up to these lows down here. Actually, I think what I was doing is I was looking at the lows of this range after this impulse finished. So after this big impulse finished, we started to form this range. So this was the low here that was a key range low. Now this is the overall low, but yeah, that golden pocket's just a little bit higher now. So I would still say it's a decent area of support below us. The first level of support though is going to be, once again, the back test of the value area high, because until we lose this value area high, we have to suspect that it will hold as a support now, and we are now breaking back into the volume profile of our prior range. So actually our very, very local support is going to be the value area low and the daily of this range, which is where I was just saying we could look for a small bounce. Because now that we're breaking back into our prior area of balance, we can look for that. Now break into it, back test it. If we flip it to support, then we can make our way up to the point of control, which is where our next box of resistance is. It doesn't even look like it wants to stop though. It's pumping right now. Wow. Yeah, let's see if let me check Bitcoin. Yeah, Bitcoin, come on Bitcoin, just a little bit lower. Just a little bit. All right, let's go to Solana here. So okay guys, Solana has been great too. If you guys were active with me, what day was this? Last Friday, we also got our hit into our box of support on Solana. And since then, we've been, and also it was near the bottom of our ascending channel here. You can see all of these coins are trading in these ascending channels. But the area of resistance that I talked about, which was the major area of resistance where I would be looking for a TP on the long and a short area, was this year-long range point of control. So this range, this much bigger range, goes all the way back. Let me go on to our daily chart. It goes all the way back to March of 2024. So a year long. And you can see here, let me hide some of this stuff so you guys can understand this a bit better. Yeah, this range here, we broke down to the value area low. We had deviated the value area low, came back and back tested that value area low on the daily chart. So let's zoom in on this so you can see this. Deviated the value area low, broke back into it, back tested it, held on the daily. Back tested it again, held on the daily. Now we got the move up to the point of control. The point of control was a very strong confluence for resistance, because in just a second here, I'm going to show you my other Solana chart, but I wanted to go, let's go into this real quick here. So we had our 786 here. We had our year-long point of control of the range. We had a naked weekly point of control and a naked daily point of control. Strong confluence up in this area. But also, if we take our volume profile and we measure just this sideways range that we've been seeing, it is near, let's see, I think I did it from this low here after this impulse finished. Yeah. Okay, so after this impulse finished, you can see we got that move down, a little bit of grind, and then we had the three-wave correction from the Trump tweet. So I took it after the impulse finished. You see here, I'm just pulling that sideways for now so you can see all the impulse to the downside finished. And then we had that Trump tweet about the reserves, and we had that big three-wave correction to the upside, followed by our ABC to the downside. And since that three-wave correction, we've been ranging kind of sideways. So we can pull our volume profile from that area, and we hit our value area high perfect of that range. Value area high hit perfect to the dollar. Now it looks like we're bouncing from the VWAP. And let me just make sure my stop is set on this. Okay, yeah. So now I'm just looking for a small correction from this area. We could actually start to see a much bigger correction from this area, but we are trading within the volume profile. We are at the point of control of the bigger volume profile. If we start to break, now that this pitchfork band here, let me get rid of this small one now so that we can clean this up. This pitchfork band, the last couple times I pointed out Solana to you guys, we've rejected pretty much to the dollar from the top of the pitchfork band. And I have been saying we cannot watch this level of resistance until we break this pitchfork band to the upside. Well, look at this time when we came up towards the pitchfork band, volume explosion in a very bullish engulfing candle all the way through that pitchfork band, showing that this time, no, you're not holding me back this time. I'm pumping. And we did pump. And so now we can look for the pitchfork band to act as a support level if we are going to continue higher. Now, this is a bit tricky because we do have the bottom of the band as well. And if we go ahead and do our golden pocket pull from the lows to the highs here, you can see our golden pocket is near the bottom of the band. So the top of the band was acting as our major resistance. Now it might flip to support. And I do believe, let's check out our, yeah, it's near the 0.5, which is a corrective target. Here's what I like and what I'm seeing here as far as Elliott waves go on Solana here. So you can see we had that, 1, 2, 3, that three-wave correction, and then we had another 1, 2, 3. So a series of three-wave corrections here. And then this push up was a impulse. You had like a 1, 2. It was a really crappy 2, 3, 4, 5 up into this area here. And then we had a bigger three-wave correction to the downside, ending that, correcting that impulse. And then since these lows down here around 121, this was a pretty parabolic move, impulsive move, corrective move. And are we in a bigger 5-wave impulse to the upside? So let's go ahead and grab this guy here. Is this a wave 1? Is this a wave 2? And then we're in our wave 3 right now. 4, 5. I didn't mean to do that. 3 here. 4 maybe back down here. And then a 5 to finish off at the top of the pitchfork at around $150, 149.5, 149.7. So that's something that we're looking at here, or I'm looking at. And if we do our trend-based Fibonacci extinction from the lows of wave 1 to the highs of wave 1 to the lows of wave 2, look at where our 1.618 is coming in. Well, the 1.618 would be the most common target to end the third wave. So we would actually have to do this here. And then our fifth wave could bring us up into this area. Maybe we see something like this, where we break this point of control to the upside, not find real resistance here, break it to the upside, come up to 150, see that wave 4 correction, and then end our wave 5 up into the bigger golden pocket. And that bigger golden pocket that I'm talking about is from the highs of the Trump pump thing that happened down to our lows. If we turn on the golden pocket, you can see that golden pocket is right in this area, and we have the major B wave highs, in a liquidity grab of the major B wave highs into that golden pocket. That to me is a really good area of resistance that I'd be watching. And actually, I'm going to take this box and I'm going to shorten this up just a bit because we want to see the wick past the SFP level into the golden pocket. So the longer the wick, like if the wick's long enough to actually hit into the golden pocket, that's really great. So just wanted to point that out on Solana. But right now, Solana is at a major resistance area. And as long as we do not start to break and close, I would say 4-hour or daily candles above this point of control, we can expect this point of control will give us a bit of a correction. And let's go now into my other chart on Solana because I want to show you also why this area, we've been looking at this area. So you can see on this one, I do have the naked daily and the naked weekly marked out here. We also had the point of control of that range, this year-long range. That's what this big long one is behind here, right up in that area. And then it is the value area high of our smaller range, right here, value area high of the smaller intermediate range. So a lot of confluence up here, but also now I'm going to just clean this chart up for a second for you guys so you can see this. It is, I'm going to delete these naked dailies and naked weeklies now that we have hit them. And I'm just going to hide this box for a second. You can see that it's our pitchfork midline of the pitchfork that we've been trading in. This ascending pitchfork, bullish pitchfork that we've been trading in. You know, it might act as a major resistance area where we do finally roll over if we can't break it. So, of course, we were expecting some resistance here. Now, our money flow's looking pretty good here now on Solana, and those daily bull divs are playing out here. Seeing the push, a little bit of a push up on the daily bull divs. These daily bull divs, if this correction, because you know altcoins like to run, when altcoins like to run, they run, especially Solana. So we could actually look to come all the way up to this next purple box up in this area around 180. Okay, now to the downside, let's go zoom in on the 2-hour chart. You can see here our value area low is still in confluence with that daily at 123. I'm just going to double check to make sure that's still fresh. No, that's not. That's right. Okay, we had one at 126, I think it was. Let's 127. All right, 1-hour chart here. Yeah, so we have this daily down here, and if we do just a fib pull of this push up of the 1, 2, 3 possible 5-wave impulse, just like with Bitcoin, we're looking, let's do this. And yeah, the 786 is going to be near that daily. I would actually be looking from this golden pocket pull. We want the golden pocket though. Okay, so this golden pocket here, and let's go ahead and do that prior March 9th range until we started breaking out. So I'll do it to here. Yeah, that value area high of that prior smaller range is going to be around the retest of the golden pocket. So I would say like 132 down to 130. 131, excuse me. 132.3 to 131.3. That is an area I would be watching for Solana to find support to continue higher, if it's going to continue higher. Now, this is a major resistance zone, a major resistance zone. So I wouldn't expect, I mean, I wouldn't be surprised if we actually roll over completely and start breaking through many support levels from this area. This could be the area where we actually start to roll over from this entire push up. Let's go grab our ascending channel again. Okay. Yeah, so 135 is the first level of support, and then like 131 is the bottom of the channel, or the bottom of the pitchfork band. So 135, 131, that's local levels I'm looking for support on Solana. Let's next go to, I got to get a little quicker here on these. XRP, it's still just chopping. You know, we did come up to that value area high, rejected. We were in that descending channel that I was showing you guys. We finally broke that descending channel and we held this point of control overall. We did have some price action underneath it, but overall on higher time frames, it did hold and we are pushing back up. But we did find some resistance around the local golden pocket. So if we do that golden pocket pull here, you can see we rejected from the local golden pocket and we are kind of seeing a bit of a drop here. So unfortunately with XRP, you know, this wave does look very three-wave corrected. Okay, what do you look for in an ABC correction? If we look at this here as an A wave, now your A wave is usually a 5-wave impulse. We call it a 5-3-5, right? 5-wave impulse in A. Then you usually see a 3-wave zigzag correction in wave B. Well, look at this. Very clear 3-wave correction in wave B. And then your wave C is another impulse. Now, this looks really hard to count, but this is clearly impulsive. So we had our ABC correction, and also your C wave is not in good symmetry with your A wave. I don't like that at all. But it does look like a bigger ABC correction here. And then we started chopping down here. And now, I mean, we are rejecting, possibly making a lower high on the charts. But as long as we can continue not to break these lows here, we could probably just start to form a range. And I would say the range that we're going to form, let me delete this now. We could look for a range to form between the value area high and the point of control. If we start to form a range in this area here, so maybe do this here, come up to the value area high, then back test, and then come higher. But overall, XRP is still looking pretty good. We still do have this range from the big flash crash we saw like 6 weekends ago. And then there's another bigger range that I'm also watching. So let's go ahead and zoom out onto the 4-hour chart, and we can just look at the range from this whole upper price action here. Yes, still above the value area high, but the value area still above the point of control, excuse me. The value area high is up in our box of resistance up here that I do think overall we could still get to that area. And that's actually closer to, what is that, 265, 264.5. And we do have the liquidity grab into that value area high. This wave B liquidity grab of this clear ABC correction to the downside. So I would be looking for the SFP into the value area high. Now, this box was here before we hit into it as a resistance, but I said I was going to keep it the same because we actually didn't quite hit the anchored VWAP, and we didn't actually quite hit the SFP that we were looking for. But I'm going to just take this box and shorten it up just a bit and just to the to the anchored VWAP level. And as that goes down, I guess, well, I'm just going to leave it. So, yeah, we do have a daily in there as well. We have a naked daily point of control, and we do have the golden pocket pull. And that golden pocket pull, once again, is from the highs of the A wave to the lows of the C wave. You can see that golden pocket is in there. So, yes, still resistance above us. As long as we continue to make higher highs and higher lows, we can probably continue up to this area to actually hit the value area high, to actually hit the golden pocket and the anchor VWAP. To the downside on this, I still like this area here where we do have this SFP into a naked daily point of control down here. The liquidity grab into a naked daily, that's good. What else we can do now is we can just look at our, well, the Fibonacci pull is going to be the same because we haven't made a new high here. So this is your bigger area of support down here. This box between, what is that, 216 and really 210. This box here is it's a golden pocket. It's the value area low of our much bigger range. We have a fresh weekly level down there. We have a naked daily point of control down there. And we have that bigger descending channel midline, which is this dotted line right here in this area of support. So I think this is the major area of support. This is more of a micro area of support, or a not as strong, not as much confluence. Let me go out to the weekly chart here real quick. And yeah, no new weeklies. We just have that weekly up here at 293. But we can check out the daily. I think I have this marked out on the chart and it's hidden, but I'm just going to remark it. So This is a daily level at 254. We could be watching for that because that's going to be near our 786 fib pull of this just last little push down that we've been seeing. And then, of course, we have this fresh daily down here at 228.38. Yeah, okay, so new naked weekly point of control near our large range point of control. That's going to be important. Okay, so not only now is this a naked daily, but we also have a naked weekly here. Okay, let's go ahead and change this just real quick to the daily. Yeah, that naked daily still up in that box. I've shown that there. Naked daily still down here too. Oh, and now the naked daily. It's so strange that it's not down there anymore. All right, anyways, we have a naked weekly point of control down here. So let's zoom in to the 1 hour chart. Let me turn this off. So we are rejecting from our golden pocket locally, but let's go ahead and we'll look at the 786 as well. You can see that 786 is right near that daily level where that could be, that's not the strongest area of resistance, but we do need to be aware of that and keep that in our minds as like a smaller level of resistance, a 786 into a daily here. Come on, ChatGPT. What is going on? Okay, yeah, so that's what I'd be looking for. Now that we have a new naked weekly point of control down here at 240, 239.87, I'd be looking for that to flip to support, to hold this support here. We can just check our fib confluence here. Golden pocket's also right in that area. And actually, I'm going to pull it to this low, which is the lower low. Yeah. So, golden pocket, point of control of our big range, and a naked weekly point of control all in this area. This would be our local support below us. And then, of course, we do have this daily down here at 228. So let's just check this fib pull here. Oh, come on. Yeah, 786 isn't even above it. So it's going to be where our 886 is. But if we get down there and touch the 886, actually, it's even below that. So this daily is not too important for me. I'm sure it's got some confluence with our smaller range. We can check that real quick. But really, we don't want to, if we start coming down there, we're probably going to come lower. So we might see a small lower high bounce from that daily, but I wouldn't be watching for too much more than that. All right, that's it for XRP. Let's now go to Chainlink. Chainlink, you guys, kind of the same thing. Chainlink did start to lose this channel, and you can see once we lost it, we backtested it. We were having trouble getting back into it, and we were starting to roll over here, but as far as our volume profile trading goes, you can see here we were holding, oh, let me pull that back. You can see that our value area high here, we broke above it. Even though we couldn't get back into our channel, we were bouncing between the channel and the value area high, started to form a range, and then we busted up when Bitcoin busted up today. But once again, we front ran the golden pocket, and that's a bit frustrating here. I mean, we're still not done. So actually, this does look a little bit flaggish. I wouldn't call this a bull flag based off of this little high here, but it does look a little bit flaggish here. We're breaking a smaller range value area high, And even if we pull it to present day now, we can look for the back test of this area at 14.58, really, 14.58. I'm going to delete this guy now. I mean, that is still a level. I'll just hide it. Okay, so yeah, that new weekly level down here. At 13,367 is going to be pretty important here because now we have the SFP into a weekly instead of a daily. Down here. But we do have that new daily that is at pretty much 13.95, so 14 daily there. Let's zoom in on the 3-hour chart. All right, so yeah, golden pocket, naked daily point of control has not been hit yet. It's been front run. And if we go ahead and look at that fib pull, we can verify that, but we'll go from the highs down to the lows. Let's turn on the golden pocket. You can see here, my box is right on the golden pocket, and we have actually front run the golden pocket, and then we're seeing a bit of a range. So this, in some ways, guys, could be considered a bullish thing, because anytime you get this close to a golden pocket, but you front run it and see a little bit of a drop, usually you'll bust. It's not usually, it gives a higher probability to bust through it the second time you come up to actually test it. So we can look for this to be busted through, and in that case, I'd be looking at this value area high 786. And I'll show you that range in just a second. So there we go. And if we go ahead and take this and we pull this just down to this more bigger sideways range here. Okay, the value, oh, that's why. Okay, so it looks like we're rejecting from this smaller range value area high, which was right before our golden pocket. We're seeing a small rejection from that area, but there is, yeah, this prior range value area high. So if we look at this prior range here, you can see that the value area high of that prior range is on top of our 786. That's in that area. Okay, let's delete this. Let's clean this up. So I do still think now, locally, I mean, it still looks pretty strong here. Money flow is on the 3 hours, even kind of trying to curve back up again. Let's go on to the hourly chart. We are seeing some bear divs on the hourly. Higher highs in price action from this high to this high. Lower highs in the momentum waves. And our money flow is topping out and draining to the downside. Let's check the 15-minute real quick, because it would be nice to come up one more time to hit that golden pocket. But if we start to really drop now and see a bigger retrace, then I think we'll probably bust through this golden pocket next time we come up there. Yeah, okay, so 15-minute bear divs with money flow coming out. The bearish Sam Bankman-Fried man boot pattern. We are seeing that as well. Yeah, just seeing a lot of we were seeing a lot of signals that we could top out here. I didn't mark out that value area high on the chart, but now we see why we did front run that golden pocket, because it was the value area high. And I would just expect if Chainlink wants to keep going upwards, it's going to probably just range in this little mini range here for a bit. We might take out the lows of that range, SFP the lows of the range, and then make that move up to the golden pocket. We'll have to see that what happens when we get up there as well, because now we do have the internal local daily, the highs, local daily highs, the liquidity grab into the actual golden pocket. So we'll watch to see what happens when we come up there. If we're seeing continued bear divs on the chart, it might be worth looking at a short. Even though we do have now technically a higher probability to break through it. If we break through it, we're just going to come up to the channel midline in confluence with the previous range value area high and 786. That is between 16.2 2 and 16.34. Okay, I got to go over CRV real quick, and then I got to get out of here. So, whoa. Look at that wick. Jeez. All right, so CRV, I wonder if this is just on Coinbase. Let me check this out. Because I had an alert on that daily, and it didn't trigger. Yeah, it was just on Coinbase. Wow. Wow. Let's go back to that chart, though, because that's where my TA is. So this wick, we're going to have to excuse because it's not... so some whale just bought a massive amount of CRV on Coinbase, which tells you that that could be like the Trump Foundation, the World Coin Foundation. I don't know, something like that. Anyway, CRV, on larger time frames, we've been trading in this pink descending channel for a while now. So you can see up here, came down to the midline, rejected, you know, just in a downtrend, and the midline was holding as a support level. Then we lost it, came down to the bottom in that flash crash we saw like 6 weekends ago on a Sunday, made the 3-wave correction up, and then just kept grinding to the downside here. And we bounced at the bottom of the channel. So this ascending channel obviously wasn't there because we weren't making a move up yet, but we bounced at the bottom of the ascending channel. Since then, we've been making higher highs. We finally broke some market structure, higher lows, higher highs, higher lows, higher high, higher low, higher high. You get the idea. So now we are just trading in this uptrend here, and we can analyze this uptrend. On this chart, though, someone asked me about this yesterday, one of my buddies in the Discord, and I did tell him to watch out for this daily level around 55.62 because we do have some confluence up here. We have the SFP into the SFP of these highs here into a daily. We also have our 786 there, and we have the smaller channel top of that ascending channel that I just hit on the charts. This ascending channel here into that area. Let's go ahead and zoom in here and look at this. Wow, that just happened. Like on the last hour, we had this giant buy, probably with a new day that opened. But none of the other exchanges did it. And sometimes when you see a wick like this on a major exchange, that means the rest of the exchanges will eventually work their way up to the level where it wicked to. I'm not saying it has to happen, but I am still looking at this 55.62 area as an area of resistance. You can see here we are right now building bearish divs on the charts, lower lows in the momentum waves, higher highs on the price action here. Money flow is overall kind of coming out now. Let's go to our 4-hour chart. Yeah, 4-hour bear divs as well. So that 55.62 area is where I would really be watching for a possible rejection. We do have the channel midline that is a bit before that, where we're kind of getting stuck at right now. But overall, I would like to see that liquidity grab on all exchanges above this high. We haven't seen that on the other exchanges. Now we can look at, for support, if we do start to drop here, what I would like to do, dang it, we're going to have to go to a different exchange because I don't want to include this wick if it's not on any other exchange. So let's look at Bybit here. Okay. All right, so let's do our Fibonacci pull from the lows of to the new highs, which this might continue, by the way. And this golden pocket, okay. We can also look at this range. So you can see from that flash crash low that happened about 6 weekends ago, now we are starting to fill out a range here, an actual range. For a while, we were just in a downtrend, but now with this new uptrend, we are starting to form a range really between these highs and these lows down here, this range. We can look at this range now. And okay, so value area high is right around that 56.6. No, it's a little bit lower, but this range is what I'd be looking at, because you can see here, let's actually check this real quick to see if the range was the same back here. Yes, it was. The value area low, we deviated the value area low, tried to back test it and get back in the range for a while, rejected, you know, in this area, rejected the value area low, rejected the value area low again, but finally we're able to flip that value area, break in back into the value area, flip that value area low to support, and then now we've worked our way up to the point of control. So point of control is an area where we could reject. If we do not reject from the point of control, we have a very high likelihood to make it up to the value area high. And we do have that internal liquidity, so we could see that fake out of the value area high like on a daily chart. Fake out, grab that liquidity, close the daily at or below the value area high, and then make that dump here. But this is leaving quite the liquidity trail here. Higher low, higher low, higher low, higher low. If we start to break this ascending channel trend that we've been in, we are probably going to sweep a lot of that liquidity pretty quickly here. Yeah, and let me actually adjust this a bit to that first high. Yeah, that's better. That's a better line. Taking it from the first high, not this one. So there you go. The top of the channel is right around that value area high. You can see that. That's coming in right around 55 cents. So, and that's also the midline of our bigger descending channel on the prior. Let's go back to that chart. Coinbase chart. This bigger descending channel, you can see 50. Oh, actually, it's not 53 cents. Okay. So we're in the general area for a resistance, and I would like to see the liquidity grab into the daily up here. But overall, I would say as long as we stay in this trend, we're probably going to continue higher up to this daily area. We'll have to see what happens once we get up there. As far as very local resistance, we can just do our Fibonacci pull from the last time we touched the channel low. Well, I'm going to pull it to this channel, to this high, but okay. So this actually does kind of make sense. You have your prior highs here, and it's also our golden pocket. So your prior highs, if you break down, you can flip your what used to be your resistance, what used to be resistance into support and continue. That's at 48, really 49 cents, but let's check the other chart here, and let's do that same Fibonacci pull, just without that big wick. So it's a couple cents lower. Yeah. This one's a bit tough, guys, because you can see how well this was like a SR flip level. This general area here. Resistance, 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 resistance. Now do we flip it into support? Just this general area here. I can't draw a straight line for the crap of me. For the life of me. Anyways, that's it here. I would be looking at that 55 cent area just because it's our value area high in confluence with our ascending channel top. And then if that breaks the 56.62 daily level. But yeah, that actually looks pretty nice there. 54.39. 54.5-ish. Yeah. Okay, I got to get out of here. Thanks, guys. Have a good one.